Hello everyone, it's me again over here. Today we're going to see why gold has been falling. Price in gold has been decreasing quite a lot, and if you see my past videos, you'll see we made this analysis and we're going to go over it, okay? We're going to go over why. We're going to understand why gold is falling. I am not a financial advisor, as you may know. This and all of my video and written content is for personal and educational purposes only. Let's get started. Before anything, today is Monday. I want to show you the economic calendar. So we're gonna jump real quick. You guys might be familiar with this site called Forex Factory, and in my case I will use metals. Okay, I'll show you within this platform here, this website called Forex Factory. As you can see, if I hover my mouse over this, I can see metals, energies, cryptos. We click on metals and this site will pop up. We go to calendar, and here it is, the week of the news that will affect all metals. I do have filtered out these low impact news. I am not interested. I want the high impact news. Now the only thing that I am seeing relevant this week is here on Thursday. Okay, Thursday I see that at 4 p.m. the Fed is going to come out and speak again. Mr. Powell, however you mention his name, one of the most powerful men on earth. And obviously these pending data claims to come up with unemployment. Okay, so yeah, that's about it. We're gonna go in. I'm gonna go real quick and switch to my charts, and let's go ahead and trading view. These are my charts. We are seeing gold here. This is chart on a 4-hour chart. Okay. Now I don't want to talk about the present. Okay. I want to see why we sold over here. If you go back to my video, my last video before this one, we had resistance area somewhere over here. We made an analysis right when it was roughly around here. I'm going to zoom in. Okay. Price was somewhere over here, and we said it might test further previous highs over here and then fall, right? And that's what happened. And the only difference was that it started going down, and then it bounced up to make that retest, and it just didn't do so up over here. It just stopped at 1927, I mean. Okay. And now we're gonna see why this happened. Okay, like why was it down, up again, and then down? Because we could have, and we did, and you can as well, predict these movements. Okay, so I will not explain what I explained in my last video on the daily analysis on the key factors. I pointed out 5 reasons why we were going to sell gold and why it was showing us rejection right there. I did that on a daily chart, and I believe I went down to the 4-hour, and that's it. Now I'm going to go into the 15-minute chart, and I'm going to go here in the past. Okay, I want to understand how, like, why did we think from all the way down before here, why did we think it was going to go down instead of going up, right? Because you might be asking that. You might be asking yourselves that, like, okay, if gold, it made this huge drop, why is it not going back further up? Like, why isn't this like Shouldn't this have been a bounce and then like maybe to go back up over here, right? That's a fair question. That's a fair idea. Well, number one, go back to my video because I say why not. And number two, here 15 minutes, we're gonna understand present time from here why it's slowly turning into a short bias. Okay, so actually I think we could go into replay mode, and that might be an interesting thing to do. So let's go right here. Okay, here we are. This is price live. We just went in the past. We dove out. We got locked in a capsule, and we're traveling in time. We're in the past. Okay. It's the first time I use this, so let me see how do I play this. Quick search. Okay, fine. I'll just do this like this. Okay, so we're here, right? We're here at the moment. This is present for us, and we say, well, we see this push up. That's interesting. What might be happening? Price might be wanting to get this retest. I also see this price over here, retest, potential buys, potential stop losses, whatever, you know, liquidity. Now I want to see, I know I can play this somehow. Do you want to exit bar mode? No, I want to play this. Excuse me, folks. I don't usually go, oh, here it is, play. Thank you. Alright, and this is going quite fast, so let's slow it down because this is 15 minutes, right? Okay, I could do 5 minutes. Alright, I like it. Okay, cool. So notice how we've been realizing how we're seeing, we're trying to find footprints. Okay, we're trying to find clues within the candlesticks on where price might want to go, and eventually where it has decided to go. So in this case, I'm going to stop it right there. I'm going to stop it right there, and I'll show you something. Obviously this is a range, right? We can't be exact and say, oh my god, that it broke resistance right there, it's broken, it has to go up. Okay, no, we have to keep seeing more things. For example, this candle right here, this bearish candle, this support area, this resistance, previous resistance, future theoretically support, right? If we go back, can I go back? I want to go back. Okay, whatever. Oh yeah, I can. Right over here. So, right. It broke, right? Apparently this support, this resistance broke. Market came down, bounced back out. So, right? That's a fair bias on why it might want to go long. If we take this resistance, right, and say, okay, interesting, we got this resistance over here. I'm not gonna draw it like too strong, or I guess too wide, right? So anybody would say this big candle broke, right, with strength, this resistance and this resistance. So the next thing I see is price starting to come down and then bouncing again outside of this area, right? Yeah, perfect. Let's keep watching, because what it's showing me next does not make sense if my bias is long from here, maybe all the way up over there in the future. Because what I need for that to be accurate is for price to respect this support in the future. And how does the market respect that in the future? Well, the candles have to close above these this price range. It has to stay up here, up here, up here, and eventually eventually break that high, that previous high, and keep behaving that way. If it fails to do so, then I cannot continue to think that it's going to break up, and that's exactly what happens. So if we keep playing it, you'll see that eventually the market closes below just how it did there. I'm going to stop it right there because that candle is the one. I mean, it's one of the candles that has to warn me, like, okay, hold on. I see the price is breaking resistance, but then it's coming back down in such a way that it's not making sense. Like, it shouldn't close back down in there if it were to actually continue to break, right? So that these are clues that I'm using to weigh down on the probability of the market to go down instead of up. Now, keep in mind, I have a general bias. Keep in mind, I already analyzed the market on a daily and a 4-hour chart time frame. We have already determined that this area is a strong resistance. It's a failed area in which the market last week could not close more, I guess, above these price ranges, right? So it's starting to make sense. It's where I'm trying to also get you guys. If you have already seen the video and now you're like continuing the series of episode 3, if you want to call it, it's all making sense. If it's not making sense, pause this video. Like I said before, please go back, watch my previous analysis, because this is now going to make sense with this playback. Let's continue. Price starting to show me this downward behavior. I have to now understand. And so because we have a short bias, these pushes to the upside, we know that it's just like the market finding better entries and grabbing that liquidity and getting all those stop losses out, all those sell limit orders coming in, right? So we're not getting scared. We're not getting nervous. We're not saying, "Oh my God, any moment we have to buy." No, we're just waiting. And there it is. These are the type of candles that we were expecting and that we like, because this was our entry range. All of this is our short entry range. You could have opened a short trade any moment within this range, and after seeing this candle closed here and these two close here, you could be more sure about your short trades, and you could have set your stop loss without a problem over here, because the market failed to break even higher, and it showed me that it's closing back in the range. Not this one time, but 2 times over here. Okay, so these are the things that you want to start. These are the foot trims that I talk about. Okay, let's keep playing. Let's see that. Nice, awesome candles, beautiful candles, lovely candles. See this already, to me, if we go in the 15-minute, which is the time frame I like a lot, look at that awesome close inside over here. Beautiful candle formation to the downside with strength. So, and look at the wicks. Look at the wicks. You may have learned around YouTube and other sources that the wicks tell a story, and that's true. The wicks just tell me, like, hey, we're just coming in here and we're getting out, coming in here, we're getting out, coming in here, we're getting out. Why are you doing this? Why is the market respecting that level? Okay, so if you did not enter your trade here, after seeing this behavior where the candles close below this price, bearish candle closing, bull, bear, bull, even the bullish candles fail to close above this resistance, this price. Those are the footprints, those are the clues. And now after this candle here, I'm selling all day, and I'm putting my stop loss without a problem anywhere over here. And I could just, I could trail it. Of course, I could trail stop this and just push it down, 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 down with the market. I don't personally do that, by the way, but yeah. Okay, so let's keep looking at 5 minutes. I usually do, I study price as I'm opening trades, 5 minutes, 15 minutes. So let's see what happens. Oh, okay. Another thing is, I also, I want to bring in here the market sessions. Okay, because market sessions are always going to also help me understand what could happen. So before I want to do this parallelly, like I mean at the same time. I think yeah. So as I am explaining to you the price behavior and candlesticks behavior and the chart, also keep in mind the times, the time of the day and the time of the sessions, and which session is active and which is not. So this is important because, like I always say, I said this before. Some price areas get retested depending on which trading sessions you're on. This is London. This was London's previous high. If we go back, remember that we started this over here. So we started over here, London high. This was London's low. New York opened right here. It opened closer to London's low, on its way to London's low, and it retested London's low right there, and it bounced off of it. It created a new low, but it started showing me intentions of going back up to this range over here, to this previous high, and eventually, as you know, it tested London's high. You see that? So it went to this previous high. So where am I going with this? Well, in the future, whenever you see any sessions range, you want to wait and you want to study the next session opening, where it opens in relation to previous sessions range, because it's very likely that that new opening session that you're looking at will want to retest an interesting point of the previous session's range. I hope I made myself clear. I will say it again. Previous session's range, which is London, because we already know what's in the future, is this. This is the range so far in time, right? The moment New York opens, which is right there, it is right here, relatively close to this support, right? Now also, if the market wants to or will go down, it's adequate for institutions and this you may heard smart money concept, but in general, like these algorithmic trades and systematic trading computers, and even just big money, they want a better price. They don't want to enter short when the market is already falling. They want to enter the market short as high as possible. So, which is why London over here comes up, grabs liquidity, and then starts falling down. So that is also a footprint. That is also a clue. What did your previous session do? Well, we see that London pushed all the way up here to where we had illustrated a potential resistance and imbalance area, and go back to my video because we all have that over there. We drew that there, and it's coming down. New York opens, tests the support, it fails to break it, goes back up to retest the high, London high, and it grabs liquidity above it to then go back down into its own range. Okay? Now, we're back in the present. We're London session closed already. This big window of volatility, as you can see, up, down, crazy orders, up, sell, buy. But what did the market decide to do? What is it showing us it wants to do? Just go down. Despite having rallied up, it wants to stay down. Rallied up, it wants to stay down. It's just a matter of time to know when it's gonna finally break to the downside. Let's keep going. There it is, another rally up. More clues that it just wants to go down. Strong bearish candles, little bullish powerful candles, I guess I could say that. And then eventually something interesting happened, which was this is Friday. So the market closed in within this range, and then you will see what happened this morning, because I want you to have this also this analysis. Okay, there it is, Sunday trading hours. Pretty boring, honestly, nothing exciting. This is Tokyo started. Let's pause for a second. What did I do? I pressed spacebar. Should I have done that? Oh god. Oh, I know what spacebar does. I think I know what spacebar does. Sorry, I just have so many. Wait, is this it? I don't think I should have played at that. I don't think I should have pressed that space bar. Okay, I think that we were here, weren't we? No, but this is present. Oh, I think I know what happened. Okay, let's go back. I think, yes. Right here. Yes, okay. Sorry, guys. Okay. There we go. So price during Tokyo session, it started to break. I'm going to pause it. It started to break this support area. So we're going to draw it just to keep in mind that it's an area of interest. And this is when you realize that you cannot feel too excited about things, because anyone here would have said, okay, we finally broke, let's go ahead, let's start getting those sell orders. But remember, well, I'm not going to say, but what do you think I was about to say? If we're seeing here, who hasn't gotten in the game yet? London and New York. So do you really think that because Asia broke these support areas and it managed to like get an interesting trade over here, whatever, that London and New York aren't interested maybe in grabbing a better entry price somewhere around here? I mean, wouldn't they at least want to try to retest Tokyo's high? If London created this range and New York opened and tested the support, it failed to break, so it went to retest its high and it made a new high. Doesn't it make sense that if London opens any moment over here or whenever it does, that it doesn't want to grab liquidity around these previous highs during Tokyo session, right? So these are the type of questions that I want you to, I guess, at least that's how I see it, and that's how it moves. That's how it is. So it'd be awesome if you can wrap your mind around it as well. Let's keep going. Tokyo created that low, and it went back up to retest the support that it broke. It made a double bottom short term right there. I guess you just start, studying the market however you decide and you wish, and soon we will see London coming into the picture. These are 5-minute candles. This was outside London, so I mean Tokyo. This was Sydney. I don't have Sydney illustrated, but Sydney made that low and it rallied. There's London. There's London. There you go. So I'm gonna pause it right there. London opens right here, and where is it in relation to Tokyo? Quite frank, like in the middle, frankly, right? But before we have London opening, what are we seeing? This big rejection. Boop. Right? So this is telling me something already. Just how it told me over here, how it wanted to stay below this area. Now we're seeing, hey, market is falling. I don't wanna lose that opportunity. Let's break up. Let's retest these previous highs. Let's grab better liquidity. And why was this a liquidity grab? Why was this a up and down movement? Here I'm looking at this. I'm looking at the instant return, the same strong movement that it made to the upside, it made it to the downside. If this was a change in direction and the market was going to continue going back up and retesting even higher resistance areas, then the market would not have done this push to the downside like that. What it should have done is respect the resistance or price range that it broke, right? So in other words, I'll illustrate it. So having broken all these resistances over here and these prices, it should have just stayed up here, kind of holding, and then eventually breaking it this way. Okay, but because it went down immediately, then it's a clear grab liquidity, push up, grab liquidity, come down. Okay, those are another type of footprints that the market leaves. Where do we go next? Right back down toward this support. Okay, and then we're gonna see New York come. Now, what do you think, if I pause it there, what do you think New York is gonna do based on the past as well? And having already implemented that chip in your mind of not anticipating the market so much on the movement it's making, but rather anticipating the market based on where it is and what it has shown me in the past that it usually does, and based on what it's showing me in the near past is it, I guess it's just a better, yeah. So what do you think New York is going to do when it opens? Definitely retest some highs, knowing that it wants to go down. Grab liquidity, grab a better entry. Okay. And we're gonna see New York open right about there. Okay. New York open. New York open right in this candle. And that's a big clue to where it wants to go short term. But just check this out. The fact that even the wick crossed this resistance, I'm gonna zoom in as much as I can. I know you guys can see this, but the fact that the market when it opened made that big push to the upside and it traded into and past these wicks already is an intention of it wanting to go a little higher. What am I going to wait for and study? Does this candle or the future 2 to 3 candles, do they respect this resistance, new support? Do they close over this area and then continues to break up? That's the question. That's what I want to wait for. Let's see what happens. Okay, I tried to pause it before, but if we were doing this live, it didn't do so here. But what are we seeing? Wick, 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 wick. And that we finally got that push we were expecting. Oh, that's interesting. I got this. There you go. Finally got that push that we were expecting to retest London high. Came back down straight away. Straight away came back down. Look at that. You see? These very steep peaks, I haven't actually like read or heard anyone name them or call them a specific way, but in my understanding, they are liquidity grabs. They are just, I mean, some people have said fake outs, others say manipulation. I just understand them as, hey, there are many orders here pending. There's a lot of interest to sell. So it's all about making money and negotiating, right? So that's a better entry to the downside. Let's do it. Let's go ahead and grab that and keep falling. Okay? So New York retests London's high, fails to actually break it or reach the maximum high, but I mean, it's fair to say it retested London's high, and it showed rejection to the downside. So even now here, we could have said, let me go short and not feel worried about the price going back up over here. And I could have placed this take profit down just over that area that we had. That if we go back, the thing is that we're in the 5 minutes, so I don't want to zoom too much out, but there it is. The support, there it is. Okay, so let's play. Okay, stop right there. What happened? Secondary retest, secondary grab, liquidity grab movement, up, down, right away. The market does not want to leave any margin of error for a better entry. It just, yeah. This happened within minutes. This was humongous. Very awesome trade right there. Boom, we got that right there. And it stayed there. It's been there, consolidated. So yeah, that is about it. Let's go. Let's how do we leave this? How do we get out of here? How do we stop replay mode? Yes, exit. Okay, there it is. Now, if you guys see here, I am trying to anticipate each session's movement. As you can see, I made these little boxes, and I like to try to, you know, predict these sort of movements and understand. Now, Tokyo is active. It opened here. It barely retested anything higher than 1916, 70s, and it's just been breaking the support areas. This is its current range from here to here, and when it closes, wherever the price is, that's going to be Tokyo's range, and therefore London will want to retest whether that's its highest point of the range or a consolidation area, right? So that's about it, people. I hope that this video, I know it's a little longer than usual. I want to honestly make these short videos easy to grab information, but I wanted to explain to you a lot of things at the same time. So conclusion, London, market trading session hours are key. Understand the market as more where what it's showing you, right? Okay guys, I'm gonna leave this over here, and I'll see you next time.